fake it till you make it. I know it's like everybody
Right.
hates the salesperson who does that sometimes. You might get to a stopping point, but I'd rather get 10 that go pretty far and then nine that get through. And one of them of those
Right.
nine blew up in my face and we have to give them some refunds or some their first month statement feedback or whatever it is,
Right.
but we got eight
Yeah.
deals done versus only getting
Right.
five in.
Hey everybody, James Shepard here with another episode of the Merchant Sales Podcast. Today, we have Kyle Morgan with us, payments expert, longtime industry professional, and we're really diving into the nitty-gritty details of Interchange and specifically some of these latest pricing tactics to increase margin by hiding true interchange costs, marking up or padding interchange, but in very creative ways. So, for those of you that don't really understand what interchange is, this is a great episode for you because at the beginning of the episode, the interview, we really dive into some of those specifics. For those of you that want to dive deeper into interchange and understand how padding and optimization work, this is also a great episode for you. At the end of the day, interchange is by far the largest cost for payment acceptance, and we're going to dive into all of that today. Following that, Patti Murphy talking about Visa Direct and the way that Visa is really pushing for this kind of near instant payment experience and movement of funds, I should say. And so we're going to be talking about that and some of the really interesting things that they are doing. Neither Kyle Morgan or any of his companies are sponsors or advertisers with my company. I like to make that clear when I interview these executives at different processing companies. Just a great interview with a great industry professional. With that being said, this podcast is sponsored by Nativia. Nativia is a fantastic company providing everything from credit card processing, banking services, providing capital for growth, whether you're an ISO or an ISV, as well as a variety of integrated payment options. So if you want to learn more about them, head over to ccsalespro.com/Nativia, ccsalespro.com/Nativia. With that being said, let's dive in. Hey everybody, I'm here with my friend Kyle Morgan, CEO at Mercantile Processing. How you doing today, Kyle?
I'm doing great, James. Thanks for having me.
Yeah, great to have you back on here. So, Kyle, you've kind of become our podcast expert on all things interchange. We've had a lot of really interesting discussions about that. And today we want to talk about interchange optimization, markup, and just kind of what's changed. There's been some new things coming along the way. But before we dive into that, for those that maybe haven't heard past episodes, give us a little flavor of who you are, what you do, and about Mercantile Processing, if you would.
Yeah, sure. So just came on my 19th year in the business. Started my company when I was 22 in my dorm room at University of Delaware. Got our first bank partner, became a registered ISO about 2 years later. So, been registered ISO for, God, that's been 17 years. Ran that for the last little bit. And about 2 years ago, we became wholesale. So we're doing risk underwriting, everything in-house, became a wholesale ISO. So took that leap most recently. And, along the way there, we've done some consulting for some ISVs on interchange optimization, contract negotiation, or, again, with some other larger hotel chains within the same thing. So that's kind
Yeah.
of what brings up today's discussion.
Love it. Awesome. Okay, so as we dive into this interchange topic, it's going to get a little bit complex. So I thought maybe before we get to all that, you can educate our audience a little bit. So, what is interchange and who charges it? Let's start there.
Yeah, it's a great question, and it's such a hard one because I think everybody's like, oh, there's interchange, and someone gets a piece of, and there's
Right.
all these things. And the kind of the cool part about being wholesale is I actually get to see it in real time where,
Right.
interchange, we run the cards, and then the next day, Visa, MasterCard wires us the money minus the interchange. So every day I get a wire transfer from all four car brands,
Right.
minus what they charge for interchange. And we can see exactly how those qualify and where they go through. So that's been a fun kind of thing to see now that we're wholesale. But basically, on interchange, it's what the card is basically paying the bank to run those transactions. So debit cards being the cheapest, there's no cost to the bank there. It's basically running the transaction. There's a little bit of fraud possibly, but it's dollar for dollar from the checking account to the merchant. So that's why it's
Right.
the cheapest. Then you kind of move up the food chain with interchange where you go up and go, okay, now it's a credit interchange. So basically the bank is floating anywhere from 1 to 30 days of
Right.
credit because they're not going to charge interest until the next billing cycle.
Right.
And they're basically paying that percentage of that. Then you go up the next food chain, it's rewards points. That's being charged to the merchant to then pass that 1% back on whatever. And then you go to the next highest, which is world cards and corporate cards. And it's one of those things where Visa's saying, hey, there's a higher risk of, for the banks. So we're going to reward them for the business transactions at a higher interchange. So that's in a nutshell. Now there's like three or
Right.
four hundred of them across all the different car brands, but all of them kind of run in those basic four tiers, in my opinion.
Got it. Okay, and so what is an issuing bank? And I guess maybe you could dig in a little more to kind of that flow of funds. So you mentioned that you get this wire from
Sure.
Visa, Mastercard, Discover, but then they aren't actually the ones, primarily benefiting from this. So talk about that a little bit of what is an issuing bank and kind of that flow of funds of who gets paid what.
Yeah, so issuing bank is the bank that prints the credit card. I mean, most common ones everybody's going to know. You got Capital One, you got Wells Fargo, all those guys as well. But basically they're the issuing bank. They're the ones who put the card out there. They take on the cost of printing and sending the card out and doing the customer service. But they run that transaction today for say $100. They're going to get the funds, the $100 plus their interchange fee back to the bank. So the bank, I run it at the merchant. They're going to get that $100 flow through, charged to the account, and they're going to make the difference. You know what I mean? So they're going to make their interchange that day. And then
Right.
that bank then says, okay, I'm going to fund the merchant. So they're going to say, okay, I'm going to make this line of credit of this credit card. It's going
Right.
to go the other direction, and that's going to go out to the merchant that way. At the end of the month, that issuing bank has to then collect those funds. If it's a debit, it's different. It's just instant. But
Right.
on credit, they're going to collect or they're going to charge interest on it. So
Right.
that's the issuing bank, and then the funds flow to us, and then we flow the funds to the merchant. So in most situations, we're actually funding the merchant the full $100, and then at the end of the month, we're billing the interchange
Right.
to that merchant. The
Right.
only exception of that is daily discount or something like that. We can kind of keep the interchange in the middle.
Right. Got it. Okay. All right. So now we kind of defined interchange. So interchange is something that's primarily collected by the issuing bank, but the rates are set by Visa, Mastercard, Discover, and then they charge through. So what are the primary criteria? You kind of alluded to this with the types of cards, but what are the primary criteria that are going to impact what interchange category a particular card transaction is going to fall into, which is going to result in a higher or lower interchange cost?
Yeah. So great question. So the most basic one off the bat is AVS and CV2. Putting that data in gets you basically what the Visa calls as the standard interchange. So if it was going to qualify for credit one or it was going to qualify for a certain type, as long as you put in that data for Moto transactions, you're going to get that. The second you don't, your interchange will downgrade. And
Uh-huh.
basically what they're saying is we're going to pay the bank a little extra because you didn't validate the AVS or you didn't validate the CV2. We're going to give that issuing bank a little extra funds because now they've got a higher risk of fraud on that transaction.
Right.
So that's the most common one. Other ones you're going to see is basically ones that Visa says, look, we're going to give a discount to certain industries because we know that we're trying to grow those businesses and give them a discount on interchange to encourage them to become card acceptors. Maybe they didn't do it very often, or there's less of them, or they're harder to go after. Commonly, you'll have government, utility, level two and level three processing is on the business side. We'll see that where you're putting more data in, so the risk of the transaction is less. So we're gonna reward the merchant slash give a little less to the issuer on
Right.
those emerging markets, all those situations.
Got it. Okay. All right. So let's now flip it the other direction here and talk about the optimization, which you already alluded to, like level two, level three. Maybe you could
Yeah.
dig a little bit more into that. When you say level two, level three, what types of transactions typically qualify and what type of data is usually provided to qualify for that lower interchange on those transactions?
Yeah, so the example we give to most of our merchants is that when you buy an airline ticket, a lot of times nowadays you're going, oh, I can see it on my credit card statement, what I'm flying, my record locator number, all that stuff. So,
Right.
like an airline, you're passing that data back. Okay.
Right.
So, what Visa is looking to do is the same thing for a B2B merchant, where if I'm a business and I'm using my business credit card to then go buy from another business, I want to know, all this data that's going to be, the SIC code of the merchant needs to be passed. The tax amount versus the regular amount that's going to be passed. Obviously the regular normal stuff, CV2 and all that. But what they're trying to do is they're passing the data. So when the card holder gets the statement from XYZ business that's getting level two or level three data, that information is now showing up on their credit card statement. And in addition to that, at a larger level later down the road and go, well, how much did I spend in restaurants? I can click a button and see it. Or I want to say, what did I purchase from this merchant? I don't have to go back to the merchant to find it out. I'll see it on my credit card statement. So
Right.
that kind of data is the information that's being pushed on level two, level three.
And in exchange for providing that data, what's kind of a rough estimate of like kind of a basis points of like how much is that merchant going to save in terms of interchange cost? I know it changes a lot, but
Yeah,
roughly.
on level two, we're seeing anywhere from 20 to 40 basis points. And on level three, again, it's just kind of moving up the levels. Instead of 20 to 40, you're seeing about 60 to 70
Okay.
on the level three side. But again, it's only on a portion of their B2B cards. So it's not saying, oh,
Right.
I'm going to save you 70 basis points on all your volume.
Right.
I'm going to save you 70 basis points on this one third. So it's still a decent
Right.
amount of savings, but you can't make the claim across their entire book.
Right, of course. What about one of the other ones I wanted to bring up as far as optimization is different business types. Can you talk a little bit about how a business might be, their MCC code on the merchant application might have been incorrect or not optimized and how you might help them, like what you could do with interchange there?
Yeah, so the most common one is utility, and we do a lot of this for, you've got a government entity maybe. So they're under government SIC code. They're getting a special rate for that, but they're also doing the trash, for the town. So you look at
Right,
it and go, okay, what's the better option here for this town? It's, under government, looking at about 2.2%. Under the trash utility, it's 75 cents. So you kind of look at their average ticket and go, what's better for this merchant? If it's an $100 average ticket, 75 cents is gonna be better versus $2.20. You know
right,
what I mean? So then you'll go to the town and go, okay, great, we're gonna put your parking tickets, your fines, and your taxes under government, but I'm gonna take this other section of your business and put that under utility and get you 75 cents a transaction,
right,
and I'm gonna charge you 20 or 30 basis points, but I'm still saving you a dollar per ticket at that point.
right.
So those are some of those optimization things you can do to walk in the door and go, let's put you on the right one. Even though you're technically government, utility is a better option for this sliver of your volume.
Got it. Okay, so kind of zooming out here, we've talked about the concept of interchange, what it is. We've talked about, the criteria to kind of figure out where this interchange cost is going to be. We have the card type in there. We have this additional data that can be provided, et cetera, et cetera. Also, I guess we didn't mention the method of entry. So, obviously, if it's a key transaction or a internet transaction, it's going to have a higher interchange than if it's swiped or dipped or something like that. So
Yep.
now though that we've kind of established, hey, this is interchange and there's some things we can do to lower the true cost. But as we know, on statements, even though any of these things may or may not be done, the true cost of interchange is not always passed through to the merchant. Quite the opposite. This is what we tend to call markup. So we have
Yep.
interchange markup or interchange padding would be a common term. What are some of the most common ways that you see on statements where it's like, it isn't even about the true cost of interchange. It's that this merchant thinks they're paying the true cost of interchange, but actually it's being padded or marked up. What are some of the common examples you see of that?
Yeah, so I mean, the most common one back in the day would be you would see an interchange. WorldPay was the most common with this. We'd see it the old Mercury WorldPay setups. You'd see, okay, they think they're interchange 10 and 10 or whatever, but then you'd go down in the list and you'd say, okay, the credit one should be at 2.1, it's at 2.3 or 2.4.
Right,
So you'd see the padding there, and it would be okay, it's easy to identify. Wouldn't be on all of them, but okay, instead of being 10 and 10, 10 cents and 10 basis points,
right,
you've got another 30 down here, down in the somewhere in the padding. What we're starting to see now is they're getting smart. They realize that someone like James Shepard out there has created an AI system that can read that padding and identify it.
right,
So what we're actually seeing now is they're taking groups of interchange and they're actually putting them in higher tiers. So when you read it, it's the right interchange for the right category and at the right rate, but they've actually moved a whole subset of interchange up to that higher
right,
interchange. So
right,
anybody reading the statement saying it's not padded, it's correct. But what we're seeing now is like, but why is this, say, hotel have every credit card at the highest lodging interchange? There is no
right,
debit lodging. There is no
right,
rewards lodging. It's all at business lodging. Are you guys doing 100% business credit cards at your hotel? No,
right,
we're at the beach. We're on we're actually going to be 80, 90% not business. It's like, well,
right,
we're seeing them now lump them into different categories, and that's where it's getting a little more confusing because the same thing. Now we dump that one into your AI, it's
right,
coming through as legit,
right.
and that's where it's getting a lot more complicated. They're getting smarter.
Yes.
So
Yeah. What about and I don't normally name drop on here, but this is such a specific issue in such a large company. I mean, I think it's a secret to anybody. Shift 4 has
yeah,
created something that I think they call it is it simple change is I think the word that they've
yep,
or the
simple
word that I think.
change instead of interchange. Yeah, very similar in the yeah, we're gonna
Yeah,
call it simple
yeah.
change. Yeah.
Yeah, so talk about that a little bit because I know my team spent quite some time trying to decipher this to be able to make it work in our tool. What is it? What are they doing along these lines?
Yeah, and that's exactly what they're doing. They're lumping. And so like this is the
Right,
hard part is like either manually or through your tool, I won't be able to tell, you won't be able to tell.
right,
It looks correct. There's no way to look at it unless you kind of said an average merchant should be at this and you compare it to an average merchant. That'd be the only way the
right.
tool might work, but you're still kind of guessing.
Yep,
What we're finding is, Shift 4 prior to Jared buying it, was a gateway. They were one of the biggest, strongest gateways out there. They had a ton of lodging. They
right,
didn't do merchant services. And so when Isaacman bought them, he actually renamed his company Shift 4 because it's a stronger brand. Smart
right,
move.
right,
So they end up going into that space. And so what we're finding is we're coming up to these larger hotel chains and management groups going, you're a Hyatt, you're a Hilton, you're a whatever. And people are like, oh, you can't go after them. They're big name brands and they're represented by giant flags. We're going, no, we walk in the door and this is the ones we're seeing. We're seeing effective rates over 3% on a hotel that, at 5 and 5 should be under 2.5.
right,
And so we're actually seeing a lot of success just going in and going, what's your effective rate across all your locations? Okay, it's from 2.8 to 3.5. If I gave you a flat 3%, would you switch? Like, well, we're Interchange 5 and 5. How can you do that? And I'm like, because
right,
you're on shift four, I know that. I know where
right,
the margins are, and we're still going to make 50 basis points. And so we're
right,
seeing us move merchants to flat because we know how much margin they've kind of put in on those situations.
right,
And so the hard part here is we're gambling. You know what I mean? There's a little bit of a gamble
right,
there, but we know how much they've put in. Our big thing now is to try and find out exactly how much, and we're trying to work through that now as we move some merchants over.
right,
Where is because then we're going to see the interchange in real time and compare
right.
the statements to what they do. It's going to be an average,
Yeah,
but knowing that information is and I think some of the flagships actually know this now because they've all gone away from Shift 4 as their gateway, and a lot of them moved to Freedom Pay as the gateway.
right,
But these merchants have been on Shift 4 for so long that it's the name, it's the what I've used, it's where we're
right,
going, and
right,
and so they're open, but they're not. You have to kind of walk in and take it on the chin and go, let me make a guess here about what I can do and still
right.
make some money.
Yeah, it's so interesting to me that that strategy. I think there's kind of this gray area, fine line, right, between kind of just truly deceptive business practice and when I saw the simple change come out, I was like, we're really close to that. I don't know. We may have
Yeah.
crossed the line, right? Because it does, and again, they'll call it simple change. You know what I mean? So it's like, hey, this is not an interchange table. This is a simple change table, but it's clearly trying to make it look that way. One of the things that I found too, I thought was interesting was kind of what you mentioned, like in our tool with ISOAMP, we'll get these statements like that and we'll match up the interchange table, right, that we think is interchange. And
Yeah.
we'll go and look because we have that assumptions tab. So we pull from the interchange table, right? And you'll go in there and it's like 87% B2B, and 13% card not present. And it's like, well, wait a minute. This is like you mentioned, the hotel or it's whatever, and it's like, no. So, then it's like you got to go in. And what we've been doing is we'll go in and literally like, you know, uh, on the back end, we'll change that percentage and say, okay, if it wasn't, what if instead of 87%, it was 20% B2B? What would the interchange
Hmm.
estimate be? And then it's like, oh, wow, it's 45 basis points less. And you're seeing that significant move. So when you're going in and talking to these merchants, I didn't realize what you were doing. That's a really interesting strategy is basically you're going in kind of making your best guesstimate as to the true underlying cost, giving them a flat rate that would save them a significant amount of money and making that bet that with that flat rate, because you're going to be able to go true interchange cost is going to be so much lower that you're still going to have some margin. Is that kind of what you're doing?
Yeah. And that's the way to do it. And again, some of these guys are management groups at this point. I mean, these flagship
Right.
hotels,
Right.
they're usually owned. The owner is one person, and the management group is another. And the
Right.
management group is getting paid off of net margin. So for them, they want to make a clear and concise decision on
Yep.
savings, so that the management group gets their cut and their pay. And so
Right.
if you can help them make the best and fastest decision without having to
Yeah.
get into this, what is interchange and where are things going and what if I just
Yeah.
made it simple for you, Mr. Management Group, to go, great, I go to the owners and say, I got a
Right.
flat savings across the board, then they get a win too. So it's almost like a double sale. You got to kind of sell to the owner and sell to the management group at the same time.
Hmm. Interesting. So, a couple of questions for you. So, as you're going into these larger deals, What is your kind of sales process along those lines, if you don't mind me asking? So you're going into these hotel groups, things like that. Do you just kind of walk in? Are you trying, do you have somebody walking in and getting you this lead? Or are you like calling the management groups? Like, how are you getting these deals?
Yeah, so I mean, we're lucky. Our COO is a former hotelier, and he's on the
Okay.
Lodging Association, so we get a little bit of an inside
Sure.
scoop on that. But for a lot of these guys, it's a matter of understanding what they have going in the door. You start at lower level. Who's your manager? Who's your GM? Find somebody in the organization who their bonus is based on net operating income.
Right.
Okay.
Right.
Because even though you're going to save the owner money or save the management team money, somebody at that organization gets paid on how much that hotel makes. And he's
Right.
trying to cut on the towel cost and the soap cost and the heating costs. So
Right.
you
Right.
start there, you get them to get you a statement. You then present something that's good for that one property. And then
Right.
what normally happens then is going, well, wait a minute, why can this guy do it for this one property? You kind of leapfrog into 13 or 15 properties because
Mhm.
that management sees it. Now they may only give you one to start. You have to then execute
Right.
appropriately, do a good
Absolutely.
job, and then you'll get the rest.
Yeah.
But that's usually your starting point. It's usually a GM, or it might be the person, the manager of the GMs.
Right.
Somewhere in that point. But
Yeah.
you just gotta have the conversation, and it's usually pretty simple. You walk in the door, on the big screen of that little of that hotel is going to be powered by Elevon, powered by Shift 4, powered by
Right.
whoever, and you go, oh, I got it. Let's go.
Yeah.
So,
Yeah, one of the other things, maybe a little off topic, but just made me think of something when you were talking about that. I think when you're doing big deals, I think one of the big mistakes people make when they're trying to get big deals done is they try to do them in a big way.
yeah,
When you're doing a big deal, you want to do it in the smallest way possible so that you can actually move forward and get some traction, right? Like,
yeah,
if you try to make it this huge thing, it's going to be a huge thing. And you're probably never going to get it. It's like, is there anything we could do? The question is like, is there anything we can do together now so that I can start to develop that relationship? Because the reason I thought of it is I had a Zoom earlier this morning. There was a software company that I was talking to about full stack payments that we were working on for a down the road deal. And, we have a gateway and we have all this stuff, right? And I was like, well, what are you doing now? And they're like, well, we use authorize.net. Well, I hate authorize.net. I mean, I'm just going to
yeah,
throw it out there. It's not my favorite. I think their APIs are awful, but they're fully integrated, authorize.net. And it's like, okay, so we can give you a TSYS VAR sheet and you could board a
you're
merchant
good.
today. And they're like, yeah. And I'm like,
Yeah,
let's do that. Right. So,
yeah,
and we agreed that down the road we have all these benefits. Yeah, you're probably going to want to integrate, but it's like today they already have it. They have authorized.net. Let's just do that. And it's like, yeah, because
yeah,
there's something that happens when you actually transact some business with somebody. And so in your case, it's like, yeah, when you're doing multiple location deal, try to get one location. You don't have to don't try to negotiate for the whole thing. Get one location. When they see the savings on that one, right, they're going to move forward. What are your thoughts on that and any other tips you have? I know you do a lot of these big deals. Anything else that you feel like people could benefit from understanding how to get these bigger deals done?
yeah. Don't be afraid of stuff like, one of the locations had a Starbucks. We're concerned about, like, it wasn't that hard. You know what I mean? Like, do the research. Just it's not hard to, throw a Starbucks in the mix, or oh, they have micros here, they have this, that, like, just go, cool. Let's look at it. Let's get past the what's your technology or what's there and go, okay, I can do all that. We're pretty sure I can do all that. Like, we go ahead and move it forward,
Yeah.
you're good, right? Like, don't get stuck on well, let me go back and look, and let me go back and check, and let me go.
Right.
Just make the assumption that you can, because if somebody else is already in there, that means you can probably get in. You know what I
Right.
mean? Go in. The worst you got to do is come back later and go, oh, sorry, I didn't put your app through because
Right.
I actually found out later on that I can't do this,
Right. You
but
might as well
get the deal done
stay confident and move forward until you get stopped.
until
Um,
you get stopped. Right, exactly. Don't get stuck on the nitty gritty. And then a lot of times what will happen is if you get well, now that
right.
confidence just went out the door.
Yep.
You know what I mean? So I fake it till you make it. I know it's like everybody
Right.
hates the salesperson who does that sometimes, but
Right.
that's a lot of what I do is like, it sounds right. Let me type in a chat GPT real quick. Yeah, I think that thinks we can do it, or let me think we can do this, blah, blah, blah. Like, and just kind of roll. And then
Right.
you might get to a stopping point, but I'd rather get 10 that go pretty far and then 9 that get through. And the
Right.
one of them of those
Right.
9 blew up in my face, and we have to give them some refunds or their first month statement feedback or whatever it is,
Right.
but we got 8
Yeah.
deals done versus only getting
Right.
5 in.
Exactly. No, I couldn't agree with you more. I think Yeah, I think it's just, I was watching something the other day from a Navy SEAL, former Navy SEAL. I can't remember who it was. One of the guys that does, he's using a podcast. And he said one of the things that you learn as a Navy SEAL is that he said the most important thing is that you keep moving forward. So he said, if you get lost in the middle of, if you find yourself in the middle of the woods and you're lost, start walking. And he
Yeah,
said, worst case scenario, you'll walk and realize I went the wrong direction, and then you'll turn around and go the other direction. But if you don't ever move, nothing's going to happen. So he's like, you're always moving, you're walking, you're making progress. And I think that's so true in these deals. It's like you just move forward. And yeah, like you said, sometimes you end up, looking stupid. And when you do, you admit it and you say, that was my mistake. I apologize. What can I do to make it right? And
yeah,
if you don't keep moving forward in these deals and get stuck and like you said, showing that lack of confidence, you're never going to get anything done. So
yeah.
good stuff, Kyle. So, all right, for those that want to learn more about you, working with you, first of all, maybe you could clarify what types of partnerships or what kind of people should reach out to you. And then once you do that, give us some contact info or where they should go to learn more.
Yeah, so we're wholesale ISO now, so we're doing everything through Iris. TSYS spends our back end. So anybody who wants to partner on these kinds of deals, you want to go after flagship hotels, we auto approve them pretty much at this point. So if somebody
Right.
wants to go after that specific market, they'd be a great contact for us. We auto board them. So for me, my cell phone number is 302-542-9053. Or you can email me at kmorgan@mpiprocessing.com.
Awesome. Love it. Kyle, always such a pleasure to have you on. Thanks for taking time to share your insights and wisdom with us. I really appreciate it.
So Visa's going whole hog into the faster payments arena, James. It
Hmm.
announced an enhancement to Visa Direct, its P2P payment service that promises to fund U.S. bank accounts linked to eligible debit cards in a minute or less.
Okay. Yeah.
That's pretty significant.
Yeah.
Plans are to make this move to something that resembles, this move that's I mean, it comes close to resembling real-time funding.
Right.
It should be available in April of 2025.
Right.
In addition to enhancing cardholder experiences, the update opens new avenues for business and governments to enhance operational efficiencies, deliver better customer experiences, and foster trust among clients.
Yeah.
Visa explained in a press release. No longer having to worry about the check is in the mail, so to speak.
Right. Right.
Um, Visa, you might say, though, is playing catch up, particularly with MasterCard. Visa Direct now reaches 99% of bank accounts in the US and 11 billion endpoints, including cards, bank accounts, and digital wallets. According to the company's website, Visa Direct serves over 190 markets and supports better than 160 currencies. Common use cases involve splitting bills with friends, moving money between accounts, receiving insurance claim payouts, or in the case of workers, earned wage payouts. Visa Direct isn't new. It's been around for more than a decade supporting P2P payments. Its MasterCard competitor is MasterCard Send. And it's worth noting also that MasterCard owns VocalLink, which is the technology backbone of RTP,
Hmm.
the real-time payments network that's operated by the clearinghouse.
Right.
RTP is the primary vehicle for moving payments initiated via Zelle, for example, and Venmo even.
Right.
In recent years, MasterCard has announced a slew of real-time payment solutions for businesses and consumers, including B2B payments, consumer refunds, digital wallet integrations that enable faster payouts to apps like PayPal and Venmo. As Visa notes in a blog on its website, Visa Direct helps boost customer loyalty and expand opportunities by reducing friction, especially across borders. MasterCard, on the other hand, said, sort of in the same vein, Reed Lutonen, executive director for the U.S. Faster Payments Council, I'm sorry, said of the Visa Direct enhancement that faster payments are crucial for the modern economy and upgrading the U.S. payment system is essential for secure, near immediate funds availability.
Yeah. Yeah.
So I think we're going to see a lot more on faster payments this year.
I
The
do too.
Fed is kind of trudging along, but
Yeah.
RTP is really making some significant growth.
Yeah, and I think there's a lot of innovators that are kind of waiting in the wings for this.
Uh-huh.
To be able to do things, especially B2B payments and things of that nature. There's just a lot of innovation that's kind of waiting, and I see them grasping a little bit in terms of going after cryptocurrency plays and things of that
Right.
nature to facilitate this. I don't think that's going to end up being the winner there. I mean, maybe down the road it will be.
Yeah.
I'm sure we'll have an insiders at some point about the potential for a Bitcoin reserve. You see that the other day?
Oh
Um,
yeah. Yeah.
yeah,
Uh-huh.
so that we'll have to talk about that at some point. But yeah, I think it'll just be kind of interesting to see how that all plays out. But I think long term, there's a lot of innovators that once the government gets this right, they can really build some interesting things.
Yeah, I agree. I agree.